We were discussing about the economic transactions, which all are the economic transactions in balance of payment. Now, the third economic transaction which is involved in the balance of payment is unilateral transfers. Now, unilateral transfers are known as one-sided transactions. Now, what are these unilateral transfers? Unilateral transfers includes gift, donations and remittances. The gift that one country is receiving from another country. Donations in the form of money which is received by one country from another country, and of course remittances. Now, what are these remittances? Remittances are the transfer of money by a person working abroad to an individual in the home country for the maintenance of the family. That is known as remittances. That is in the case of an individual. Now let me explain in the case of a country. Just as it takes place between an individual, it can take place between the countries. Here we are concerned about the countries. So, remittances are such transfers of money by an individual who is working in a foreign country to an individual in the home country for the maintenance of the family. That is known as remittances. Now, gifts and donations. As I told you, for example, in the case of natural calamities, now you know Kerala experienced with the natural disaster like flood, landslide. So in all these cases, we got financial assistance from other countries, from the foreign countries. That is an example of unilateral transfer. The donation, the financial assistance, the grant in aid that we are getting from other countries is an example of unilateral transfers. Now, it is known as a unilateral transfer or a one-sided transaction. Why is it called so? For example, if a country is suffering from a natural disaster, other country may help this particular country to get rid of that situation. Now, the country which got the financial help doesn't have any liability to pay it back. It is not given by another country to the affected country in terms of interest or loan or anything like that. It is just a financial help. So it is not necessary that the country which is getting that financial help should give that amount back to the other country. That is why it is known as one-sided transaction. If we have a liability to pay it back, it is known as a two-sided transaction. We have to pay it with a rate of interest. It will be in the form of a loan. But here it is not in the form of a loan. It is only a financial help. It can be in the form of a gift or donation or remittances or anything like that. So, in such a case, if a country is receiving a financial assistance like this, that particular country need not give it back. There is no liability for that country to give it back. So, that is known as the unilateral transfer. Now, our country also can render help to other countries if they are suffering from any kind of natural disaster. That depends. If we are able to do it, we can do it. It depends on the financial position of each and every country. So that is why unilateral transfer is known as a one-sided transaction. It is a financial help. We need not give it back to the other country. That is known as it is one-sided transaction. So here, when we speak about unilateral transfer, it is not export and import of unilateral transfer. It is a financial assistance. Therefore, we can write it as receipts and payments. Receipt means what? Which we get in. Likewise, we also, if we are in a good financial position, we may also help other countries who are affected by natural calamities. Therefore, we can say receipt and payment of unilateral transfers. The remittances that we give, the remittances that we receive, the gift that we receive, the gift that we give, the donations that we give and donations that we receive. So, receipts and payments of unilateral transfers. For the other two, we have just written it as export and import of goods, export and import of services. But here, instead of writing it as export and import, the correct term that you can use here is receipts and payments of unilateral transfers. I hope it is clear to you. Now, the next economic transaction of balance of payment is Capital transfers. Capital transfers includes all items which are related to capital receipts and payments. Capital receipts and payments. You have learned about capital receipts and capital expenditure in government budget. I think you can recollect that. Capital receipts and capital expenditure, receipts and payment. Now, what all things are included in the capital receipt and payment? You can just recollect it. Borrowings and liabilities, repayment of loans, purchase of asset, sale of the asset. Purchase of asset is a capital expenditure because it will give benefit for the government in the future. That is why it is known as a capital expenditure. Then sale of assets. All these comes under the capital transfer. So capital transfers includes both capital receipts and capital payments, or capital expenditure also you can write. Capital receipts and capital payments. Now examples are, you can recollect, that is repayment of loans, borrowings and liabilities. All these are the one which we learned in government budget and economy. Then it includes purchase of assets, then sale of assets. Through sale of assets, government is losing. Okay, so all these are the examples of capital receipts and capital payments. So whatever we have learned in government budget, just recollect it. What are the components of capital receipt and capital expenditure? I have just written those concepts which we have learned. So capital transfers include capital receipts and capital payments. Examples are repayment of loans, borrowings and liabilities, purchase of assets and sale of assets. So this is with regard to the economic transactions involved in balance of payment. So far we have learned what is balance of payment. It is a systematic record of all the economic transactions taking place within our country and the rest of the world. Economic transactions means the two things which has to come to our mind is export and import. It can take place with the help of money. So we can explain balance of payment in another way, that is, it is a record or it is a statement which shows the difference between outflow of foreign exchange and inflow of foreign exchange, which can happen due to export and import or on the account of economic transaction. Then we discussed about which are the economic transactions that are involved in balance of payment. What all items comes under balance of payment, that is main items that comes under balance of payment. The main items or the main economic transactions are, number one, that is visible items. Visible items means goods which can be measured, touched and seen. There it consists of export and import of goods. Next economic transaction, number two, is invisible items, services which cannot be touched, which cannot be seen or which cannot be measured. It consists of export and import of services. Then comes unilateral transfers, which are one-sided transactions. That means it consists of the financial help or assistance like the donations, gift, remittances, etc. So we have to write there as receipt and payment of unilateral transfers. Then the last economic transaction of balance of payment, the last main item of balance of payment is capital transfers, which consist of both capital receipts and capital payments. Examples of capital receipt and capital payments are repayment of loans, borrowings and liabilities. Then comes the purchase of assets and the sale of assets. Now, this is all with regard to economic transactions in BOP. I hope it is very clear to you. Now, we will move on to balance of payment accounting. why I have written a heading like balance of payment accounting. Now we are bringing the concept of accounting here. Now I told you the two transactions which are taking place here is export and import. Through export, what is happening? There is inflow of foreign exchange. Inflow of foreign exchange. And through import, what is happening? Outflow of foreign exchange. That means our money is flowing outside. Outflow of foreign exchange. That means our money is flowing outside. Our money is flowing out. That means we are purchasing goods from other countries. For that we are paying. So outflow of foreign exchange. Our money is going out. Outflow of foreign exchange. Okay, our money is a foreign exchange for other countries. Anything other than the domestic currency is known as foreign exchange. So our money is a foreign exchange for those countries which are receiving. Outflow of foreign exchange. So through export there is inflow of foreign exchange. We are getting money for the goods that we are selling. For import there is outflow of foreign exchange. We are paying for the goods that we are buying from other countries. Now inflow of foreign exchange. Inflow of foreign exchange. That means the money that we are getting by selling the goods and services. The foreign exchange that we are getting through selling of goods and services can be recorded on the credit side. We have already learned inflow of foreign exchange. Inflows are always recorded on the credit side of the accounts. And outflow of foreign exchange, the one which is going out, that is recorded on the debit side. So the inflow of foreign exchange will be credited and outflow of foreign exchange, the money that is moving out, is debited. So credited and debited, credit side and debit side. You can just recollect what you all things you have learned in accountancy, isn't it? Credit side and debit side. I told you each and every government of each and every country will maintain a financial statement of all the economic transactions taking place. We can just recollect what I have explained to you. Even at home, the amount of money which is coming to us, the amount of money which is moving out from us, we will have a proper record of all these things. The amount which comes to us will be credited. The amount of money which moves out will be debited. Likewise, government also has a systematic record of all the transactions. That is known as balance of payment. Therefore, balance of payment has two sides. One is credit side and the other one is debit side. The inflow of foreign exchange can be credited and outflow of foreign exchange can be debited. Therefore, it has two sides, credit side and debit side. Therefore, here we are using the concept of double entry bookkeeping. Am I right? Double entry bookkeeping system. So, balance of payment concept is using the concept of double entry bookkeeping. That is why I have written the heading as balance of payment accounting. Accounting sense, in balance of payment, there will be two sides, one is credit side and one is debit side. So any accounting system which uses debit side as well as credit side is based on the double entry bookkeeping system. Therefore, we can term it as balance of payment accounting. Now normally in accounting sense, we will make both the credit side and the debit side to be equalized. That is the normal way. Usually you do like that, isn't it? We will make both the sides to be balanced. Double entry book system where both the credit side and debit side, which we we make it as a balance. In balance we make it, isn't it? That is why we use the same concept here for balance of payment accounting. Now what are the benefits of that and what are the main drawbacks of that? All these things we will be discussing towards the end of this chapter, which you will come to know about it. Okay. Now this is all about balance of payment accounting. Why it is known as balance of payment accounting? Because it has both credit side and debit side. It is a financial statement which shows both the credit side and the debit side. Credit side due to inflow of foreign exchange through export. Debit side due to outflow of foreign exchange due to import. Therefore, it is based on double entry book system. That is why it is known as balance of payment accounting. Now, we will move on to the next topic, that is balance of trade. What is meant by balance of trade? Now, you all have learned about the components of balance of payment. What are the economic transactions of balance of payment? We can recollect it one by one. That is the visible items, invisible items, unilateral transfers and capital transfers. In that, the first component, what is that? Visible items. What is visible items? Which can be touched, which can be measured, which can be seen. That is goods. This is known as trade, balance of trade. The goods, the export and import of visible items, export and import of goods comes under the balance of trade. So the first component, except the other three, the first component in the balance of payment comes under balance of trade. So the first component of balance of payment, that is visible items, comes under balance of trade. So how can we define balance of trade? Balance of trade is the difference between, BOT means balance of trade, is the difference between both export of goods and import of goods. Therefore we can write it as balance of trade is equal to export of goods minus import of goods. Export of goods and import of goods. This is balance of trade. Now, sometimes we can find export of goods greater than import of goods. If export of goods is greater than import of goods, that is a positive sign, right? And therefore we can term it as surplus balance of trade. Because you know, when we are exporting the goods, there will be inflow of foreign exchange. Therefore there is surplus of balance of trade. Now the opposite can also happen. Sometimes export of goods can be lesser than import of goods. What will happen in that situation? Export is lesser than import means what? Import is more. That means outflow of foreign exchange is happening more. Therefore, we can say there is deficit in the balance of trade. Deficit in the balance of trade. Deficit in the balance of trade. Now, sometimes export and import will be the same. Export of goods may be equal to import of goods. Therefore, we can say there is a balance of trade. There is a balance in the trade of visible items. Balance of trade or trade balance. It is known as balance of visible trade. So, if these two are equal, we can term it as balance of visible trade. Balance of visible trade or visible items. Balance of visible items or balance of visible trade. So, what is balance of trade? The first component in the balance of payment. That includes under balance of trade. What is the first component? Visible items, which can be touched, measured and seen. Goods. So, what is balance of trade? Export of goods minus import of goods. So most of you will make mistakes. You will automatically write services along with that, because in economics we normally use the term goods and services together. So don't make the mistake. Repeatedly I'm telling you, only goods should come under balance of trade. So when you explain balance of trade, how you can explain balance of trade is a difference between export and import of goods only. So what is the equation for balance of trade? Export of goods minus import of goods. Now if export is more than import, there is surplus balance of trade. If export is less than import, there is deficit balance of trade. If export of goods is equal to import of goods, we can say there is a balance of visible trade. Therefore, we can say that this balance of trade is a part of balance of payment. It is very important point to be noted. Balance of trade is a component or a part of balance of payment. Right?